The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And not a lot of news out there other than currency-related news, and that's the same currency-related news as what we've been talking about before. The Japanese yen-related news, the euro-related news, and the shakedown of what happens after they kind of step on the gas pedal of devaluation again. Okay, I'll turn off my camera here. Saying we're having a little bit of a problem there. Okay, so as we can see the chart, this, in my opinion, since we're ultimately going to get into the yen and the euro and all those kind of usual suspects, let's take a look at the Aussie dollar. This is something that's really been, beat up pretty good in the past, couple of months, past year actually. But in the last time I was in Australia, this thing was trading like 108. Now it's trading 86 and some change. But we talked about recently, this is kind of the next central government kind of MO. It's not been really out there like the rest of them, but we want to take a look at the Australian dollar because technically I believe it's a great setup in addition to having that fundamental, big brother behind you on this one. They haven't come out and completely, totally got into the race to zero situation like the rest of them, but I feel like they're going to, they've hinted at it. There's been some comments out there. I think they're going to actually kind of formally come out with some things that are going to fundamentally drive this thing farther south. And technically, we've kind of been bouncing around these weekly. I'm showing the weekly unfair lows right now, or the latest weekly profile. But as we look at these unfair lows around 87.19 on the weekly unfair lows, and that was coupled with the dailies in the very similar neighborhood of 87.26. So you got about a 7-pip spread there between those two weekly and daily inflection points. We rallied back up into a little bit farther than I wanted to, came off, rallied back again, gave you another chance to get a high probability trade-off on the short side here. And I just feel that this thing could really start sailing south in a large way. I'm going to kind of ignore one of the divergences that I usually pay attention to on the Australian dollar. But as we look at the long-term situation on the Australian dollar, let me just expand this out a little bit. And I've got a bad tick. So, Michael, I don't know if we can do anything about that on Australian dollar. I've got a bad profile tick down there. But trust me, we've kind of come down from the 110 area over the past year or so. And, what am I looking for as targets on this? Really don't have any targets on the downside. I just want to kind of, relate, again, as we normally do, how these profiles work on the shorter-term time frames and allowing these things to kind of provide weekly takes precedence over daily, over 240 or 60 down the line. And I personally like to trigger off of those daily and weeklies, especially as they're, possibly lining up as they did on the Australian dollar. But right now, this is the 240 situation, and 85.74 down below here is going to be the next target, so to speak. And if we can close below there on a daily, then we may start having new profiles to kind of regulate this down. It's been a little noisy around that 87.20 neighborhood. But, we've come off 100 pips again pretty quickly since that happened, and that's pretty good move for the Australian dollar. So as you can see, this is the 240 situation, not regulated it as well as like the euro trade and the yen trade, but again, put a gun to my head, ask me for targets. I think the next leg down is 85.74 on this, and possibly much lower. And if we start going down there that low, we may start getting new daily inflection points to key off of and new targets on this. So that's kind of where the Australian dollar is lying these days. We got to talk about the ruble really quick. And the reason I'm kind of going into currencies pretty hardcore here is, these are the things in play right now. And, you like I said, you got Big Brother on your side. And, Big Brother on your side, and this one is the U.S. government kind of continuing to preach sanctions against the Muscovites. And what we're doing with the ruble is, I think my connection's kind of weird here right now, but we do happen to have some things to look forward to on the support side on the ruble. And, we talked about, what do you do up here? We had some good breakouts around the 38, 39 area, went up to like 49. Here's the weekly situation on the ruble. We do have a new profile that is hard coded in down here, 4208. All right, that's the unfair highs on the weekly. So now we can start hoping that the ruble becomes less devalued or valued, I guess, and 43.54 at top. So that DMZ between 42.08 and 43.54 is going to be what we hope that the ruble can come down to and come down, let the market come to you in this instance. If it doesn't, hey, we might have missed the trade there, but this is the high probability area for the ruble right now. And, that raising the rate kind of statement there was kind of what we needed, actually. Here's the 240 on the ruble, sitting right there at short-term support, but we may drive a little bit lower, get some people out of the market on the long side, and then we'll be sitting there hopefully trying to catch everyone's sells in the buy area at that DMZ. So we looked at the Australian dollar, the ruble. Okay, guys, so the euro, here's the daily situation here. We never really got totally up into that inflection point at 126.34, but again, I don't see, fundamentally speaking, this is kind of like the yen situation at this stage. Here's the weekly. We kind of got into that DMZ between 125.74 and 126 and some change like we talked about. But, I don't, and even with the purple bars down here on the weekly, the overextension bars, I don't see a lot of reasons. There's zero reasons to go long this, in my opinion, and we're just trying to figure out how to pick our battles at this stage. Here's the 240 box appeared, came down, hit a little bit of the short-term targets, but again, I think the next leverage point on the euro would be around 124.62 and that 124.68 area. So that's going to be the next kind of leverage point, in my opinion, just to kind of get to some degree into the short-term game. Man. And we don't have anything else to really key off of, but, we haven't done that major flush in the last couple of weeks, eclipsing recent lows here on the euro. So, that's the high probability area, 124.62, 124.68. I'd wait for that to hopefully rally back. If you caught some good trades on the south side there, that's great. But, now it's kind of difficult to sell these in the hole, so you got to be patient at this stage. Here's the yen. The good news is we've got a new set of inflection points here that appeared after yesterday's close, and today we've come down and touched it almost to the tick. Let me blow this up a little bit for you. So this appeared at the end of this close, and we came down and used it as support, and I think this is just going to be par for the course here, letting daily profiles regulate this back up. 117.34, top of the box, and we reached a low, 117.58. So not quite there, but, at least staying above profiles on the end, and therefore, in conclusion, stating very simply, it's okay to be long, not okay to be short. And it doesn't seem that the Japanese are really going to stand aside from stepping on the gas pedal on this trade by devaluing their currency. And that's no mystery to anyone. And we got to wrap up this segment with the dollar because, as you know, a lot of these currencies comprise the dollar index. So here we go. That 87 area we broke out above. We're kind of sitting well up there now, but here's the short-term profile information to key off of. 88.41 now, the 240 unfair highs, and down below that most recent profile high around 88.14. So, what do you do with the dollar? I think you get, hopefully we can just kind of congregate up here, kind of form some flag pennant type little situations and stay above these daily unfair highs and then be able to trade breakouts above 88.41. I know that recently just happened, but I think you've got to be sitting on the trigger finger on the dollar going up a little bit more here, and that's kind of the way I'm looking at this right now. We may have a new daily box appear pretty soon, but that's just remains to be seen. And if you want to be in the dollar, those are the inflection points to be aware of. And as we're talking about these particular currencies, I'm going to leave out the British pound right now. We've got to take a look at gold and the way gold's been acting surrounding, that dollar continuing to get stronger. We have had a new profile appear, and for highs at 11.98. So right now, what do you do with gold? I'm just kind of sitting tight here. If you can hang in this trade on the long side, that's great based on your appetite for risk. But right now, we're back in a fair auction. We're going to talk about gold a little bit more when we come back. And we're going to talk about the Standards and breadth indices and a couple of choice picks out of the scanner on the stock side. So we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the break. We were talking about gold a little bit here, and at 1198, new box appeared, and what do you do now? Still, for me, trying to be stingy on gold here because, as we remember, if you go back in time, I'm looking at my chart here. I hope it's up in the den. We were kind of leveraging off that 1227 area before on this December contract, and kind of played that game up, and then we talked about 1241. And kind of calling it quits below there. That's kind of this very similar situation, almost mirror image right now. Above 1180, looking at it versus the dollar and technically speaking and all that, just, staying long. But, gold can do anything, I mean, as you guys know. So right now, based on my appetite for risk below that 1198 area, I'm going to be kind of stingy with this because we could have another pullback back into that 1180 very easily. That's a little bit too, the way I trade. I mean, it may not be the way that you guys have profitably traded in the past, but I'm just going to be a little stingy there and then try to wait now for a close above the 1198 area just to kind of be safe, or maybe I'll just start nibbling above there without a close. But basically it's buy above 1198 or wait for pullbacks back into this 1180 area, and in this no man's land in between, I'm just going to kind of, let it bounce around because I just don't feel like that's where the leverage is. And if I hold it from a trading psychology standpoint, if I hold it down to 1180, I want to kind of have normally kind of keep the powder dry so I can kind of lay wood into things where we have kind of these inflection points lining up. So, that's just the way I'm looking at gold. And it's very, very similar to the way we traded it from 1227 above 1241 there before. So that's the situation on gold. I want to look at crude oil really quick because this is kind of blowing my mind a little bit. I mean, in years past, OPEC guys getting together and calling these meetings, and we're going to make sure oil goes back up. I mean, this is the kind of thing that in the past, just the hint of that would have caused oil to spike up a little bit more than it has now. But yesterday or Friday, we had the highs around 77.83. The unfair highs on our daily are 78.48. Didn't quite reach that. So you kind of hope, and we've talked about crude oil not really breaking profiles on the way up. There's still no technical damage here. I was hoping that we'd go a little bit higher based on all this kind of, good old boys club getting together and trying to, bid rig the thing again. But, I mean, the fact of the matter is our U.S. oil imports are at 30-year lows, and it's almost like who cares about these guys getting together at this stage? And I think the market's telling you that. The other thing is on the December crude oil contract is we've got kind of indications. It's really early in the week, but we've got indications that we might have a new weekly profile down here. We may have some new inflection points aside from the ones I just spoke of, 78.48, and then downside target 74.54 on crude oil. So, it's we're definitely in no man's land right now. Let's see if I can get my chart up. Okay. Because we're within about a $4 a barrel, range here in profiles. But it's very interesting how crude oil is not reacting a little bit more bullish to the, I guess, what would you call it? The threats. I think that's a good term. Some of you guys are trading natural gas. I just want to kind of peruse through there just a tad. this real? Is this gap down row, guys? Or is my e-signal messed up here? I'm going to get some information on that before we start commenting on that. The other thing I traditionally look at, which is really also blowing my mind, is the 10-year. I call it, 126.10 down to 126.02, probably the best trade on the books right now. If the stock market ever does head south just a tad, this thing I think is going to break out above this daily profile, close above and possibly keep running for a while. But right now, trying to hope that the stock market comes down is going to be a little fruitless, because as I look at I'm looking at the Shanghai, I was looking at the Chinese situation earlier. Here's the S&P 500. Our breadth numbers are still extremely positive with no indication that they are changing to negative. We'll talk about that a little bit right after the break, because that does affect the 10-year. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey guys, thanks for coming back. Here's the Shanghai. I watch this thing a lot. I'm over here in Asia. A lot of guys don't trade it that are probably listening to this show. But when we started on July 28th, kind of coming up into these, this is our weekly chart on the Shanghai, kind of coming back into the fair auction here instead of staying below it. That was kind of the radar signal there. Then on September 1st, we obviously had the breakout above profiles that were in force forever. So you basically had a demarcation line from September 23rd, 30th of 2013 that actually pretty much stayed in force with three profiles at the same level, and then the breakout happened September 2014. So that's as these profiles stay in force longer, they really, really mean something. And I've just kind of cut off the data prior to that because we're trying to save some bandwidth here for the show. But, as we break out these long-term inflection points lining up, those are very, very powerful moves because the longer they stay in force, the more valid the breakout will be on the upside or downside. So as we broke out here, just want to blow this up a little bit. We, kind of had our launching pad situation after the breakout, and then we pulled back and almost to the tick here. 22.79 was the lows that week, or were the lows that week, and then 22.72 was the bottom of the box. So, using our scanner, you'll see all this. You'll see these inflection points ahead of time, and then we obviously traveled the entire fair auction and broke out again. So, China obviously is taking our lead again, and it's just amazing. I mean, there's no waiting game anymore. There's no, as soon as there's one economic data set that comes out that says, hey, there's a possibility that the stock market won't continue to go up like crazy, they step in and do this. So, I mean, again, we've talked about this. Where does this madness end? Ultimately, I have no idea. Here's the daily on the Shanghai. So the Shanghai obviously is going into the nosebleed section right now, and that's to some degree Yuan related. And again, that's why we look at the currencies first thing this morning, or for you guys, because it seems like everything's hinging on central bank type. No mystery to you guys, central bank type activity. So that's the situation on the Shanghai, and that's going to affect a lot. And the Australian dollar will definitely get affected by that, and I think it's going to also, predict some kind of downward move in the Australian dollar based on a lot of these fundamentals that we're talking about, in addition to the technicals that we've already spoke of. Here's the S&Ps, and this is why and I've got the admin version of the scanner. You've got a much easier to read version. I'm just looking at the raw numbers here. The speedometers on the retail version, we're going to get into that in a webinar, but this is our S&P breadth. It's it's very, very positive on each time frame, and I'm not arguing with this. And there's a lot of articles out there why this might be a bull trap or whatever, but let's just say it's a bull trap for another month. Do we want to try to short this against the breadth being positive for another month? I don't think so. I think as traders, you just kind of go with it. Don't try to make a lot of sense of, you guys trying to be the one that picks the day that the market tops, and that's after about a 30 to 50 tries in a row. I just don't think that's a good trading plan. So the breadth being positive, and again, here's the weekly chart on this, just to kind of give you an idea of where we're at. As you can see that, I'm just going to kind of blow up the latest. I'm going to take out the in-between. As we notice, the middle ground is getting less and less, but as we just take that out altogether, this is a very positive long-term breadth signal off the weekly, and here's our daily. Let's see if I can blow this up here. So that's where we're at, taking out the middle ground. It's pretty easy to see. So, what do we do in situations like that? We're still trying to buy support until told differently. And when we turned October 17th, October 20th in there, there's the 20th, there's the 17th, the daily breadth turned positive then. We had some targets, that 1935 area and 37 area, and then as we closed above, it was do not short, do not short, do not short, and today, do not short. I hate to be so simple about this, but that's basically, how this works. Not a lot of thinking to do there, except buy support or buy breakouts. Here's the NASDAQ. The numbers here, again, still 4176 daily. That's your kind of say uncle below. We may get some new profiles here on the intermediate. Here's the kind of regulated 240 trade up. Short-term inflection point scale off 42.59 and down below 42.26. So those are not intermediate or long-term numbers I'm giving on these. These are just things, if you're trading very short-term, these are not bad areas to pick battles around. So breakouts above, again, 42.59, and pullbacks to buy at 42.26. And if the breadth changes during that time frame, if you have our scanner while you're playing around with those trades, you'll know it. Don't look at this too often. We don't look at this too often. But the Dow trade, again, we closed above weekly inflection points, 17,279. Haven't looked back after that happened. Here's the daily. That was the weekly. And as you can see, guys, there's just nothing up here. I mean, we're just in the ether up here on the Dow, and there's no profiles to let us know anything different. We've got to kind of drill down a little bit farther on the Dow. And the reason I brought this up is the Dow has been above profiles. And I'm going to go into here and just let you know really quick. The Dow. The Dow's been above profiles on the daily for 22 days in a row. It's been above for 5 weeks, and on the 240s now two sessions, or two 240-minute sessions. But, we don't have a new box attempting to appear here. We don't have a yellow cell. So, again, as crazy as this sounds, possibly, this is something where we do not short this. There is no reason technically that I see to start thinking about getting on the short bandwagon with the Dow, the S&P, or the NASDAQ. Now, we may have a market downturn today, but the probabilities and the odds of that happening may not be very high. And if it happens, then you kind of, won the lottery there. But right now, I don't think it's a smart thing to try to go against what's happening here, even with the dollar climbing stronger and stronger. Here's the DAX. I wanted to bring this up today because, I looked at, my partners in Europe. I talked to them a lot, and we talked a lot about currencies. We also talked a lot about the indices in Europe, the FTSE, the DAX, the CAC. Here's the situation on the DAX. So we talked about that 9306 area on the weekly. Let me pull up the weekly. I'm sorry, I didn't start with that. Here's the weekly. So that 9306 area right there, I know we kind of poked our head above and went down below. That's what stops are for. But when we started getting back above, those were the okay signs to flip to the concept of long at that stage. And why? Because you've got so much help here being above these profiles. And we talked about getting above 9306 or getting below 9191. When we get above 9306, look what's happened here on the DAX. And, where's this thing going? No profiles up here. Almost in the area where we could have some targets around 98, 96. If you're trading DAX futures, that's what I would consider to be a target to rethink things up there. And we're trading about only 100 points lower than that right now. So that's the target on the DAX for you guys that are trading the DAX. Now, anything can happen. I mean, these big news events seem to coincide with inflection points, which is what, my experience has been. So, let's say we get to that inflection point and then, we somehow hear that Iran got everybody drunk and talked them into letting them have a nuclear program. And that might happen around there, and then the market might come back. But right now, breadth on the euro, on some of the Europe, well, I'll show it to you. Hold on. Let's get our breadth up, the raw numbers here. On the Eurostoxx 50, positive on the weekly, positive on the daily, positive on the 240, positive on the 60. So on these 50 stocks, which is not the best sample in the world, we're going to put a Eurostoxx 600 in here. But right now, the breadth on the most active usual suspects of the Eurostoxx, the 50, you really can't, in my opinion, go against that breadth. So we may reach these targets at 98, 96 up there. Okay. Talked about beans the other day, and the January beans we talked about. Let's see, I'll pull that up. Talked about that, kind of ability to have a high probability set up around 1002, 1004. That was really nice the way that worked out. I think we reached a low of 1003. But what do we do now? So we're right in the middle of a fair auction on the beans, and what do we do now? We've got a new set of inflection points has appeared on our 240s. So support, in my opinion, on the beans right now on this contract is around 1016. If you're trading beans, corn and wheat are kind of settled in at this stage. And let me pull those up. And here's the daily on corn. I don't see a lot of changes in corn. I don't know if this is it's definitely something that obviously a lot of people are trading, but support on corn right now is 379.5. That may be broken. I'm not as bullish on corn as I am on beans, so you'd have to pay attention to that and put stops oriented around that 379 area on corn. Tesla in the news today, I want to kind of pull that up for guys who they got a deal or considering or may have already signed with BMW. Pre-market, we're 245.78, and this is a situation on the daily on Tesla. Got back down below profiles, and those unfair lows are around 243.76, so that's the big inflection point to pay attention to on Tesla. And any breaks below 241.43, I'm going to have to say uncle on that based on my appetite for risk on any long action on Tesla. Here's the weekly on Tesla. Precariously sitting here. That's why I'm saying, all these inflection points around this 240, 243 area, it's going to have to hold, or, Tesla may start seeing some south side movement here. Okay. I want to pull up another bellwether, at least for the Dow still right now. We talked about this. We hoped, and let me see if I can get IBM to work here. Okay. Let's get a better picture here. Okay. And let me see where we're at pre-market here. 161.50, it looks like pre-market. Let me just make sure that's the case. Yeah. So Friday, this is kind of the action. And we talked about the breakdowns on IBM and possibly, there's nobody interested in being long this stock, it seems, right now, so we're just going to go with that. I'm kind of bearish on this in general. I think this stock could come back to 100 easily. And we came up Friday, and we talked about hopefully we would go back and retest this inflection point on IBM. We reached a high on Friday of 161.95, and that inflection point's 162.27, so about 30 cents away from that inflection point, came off almost $1.50 there. So, what do we do now? I think it's a relatively safe trade with stops above the 162.27 area based on the appetite for risk, and you really got to call it quits on the short side on IBM above 165.04. So that would kind of start doing some technical damage to the shorts, and as you can see, I'll pull this up again. As we had the big news that one day, we haven't had any technical damage above profiles yet, and I think we're going to, this is the way I'm leveraging the bet, if you will. 162.27, I think, is a decent Maginot line for this at this stage. But if you're going to try to hang in there again above 165.04, might be something to pay attention to, that you could re-enter the trade later. There's no reason to try to hang on to something. Facebook, asking around, calling around, a lot of guys I know are trying to get short this thing and trying to hang in there as the market keeps going up. With stops, they can always get back in the trade, but a lot of guys are just kind of getting dug in on Facebook shorts right now. Here's the unfair lows on the weekly, around 73. We're going to talk about that a little bit more when we come back to break and look at a couple other picks I was looking at from the scanner. So hang in there, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Got the show on the scanner in the den right now. My video is off. Might be a good thing. I was trying to find things that, just a little filter on the S&P 500 and what was kind of hanging around bottom of the profiles on the daily, and also looking like they may have been below profiles and come up and retraced. And, just really wanted to bring out a couple of things. AT&T looking relatively, non-cooperative, relative strength type of situation. Here's AT&T sitting below profiles 35. Excuse me, what is that? Sorry, it's 35. Yeah, 35, 34 on it for the lows, trading right below there. Pre-market, 35.24. So again, this is one picked out by the scanner. Got a high probability situation. If the market does pull back, this may actually kind of, lead the way. Not a volatile stock by any means these days, but again, John Deere, similar situation. Let's pull up John Deere. And these are not the crack stocks, folks. These are okay. So cool thing is, we kind of got below profiles, come back, and we're retesting just like we had before. So we're going to have to pay attention to John Deere, and this allows you to put stops oriented on these shorts above here. So 87.09, and you want to look at some of the other indicators that you might be looking for, some shift momentum type things. But this one basically 86.81, 87. Drill into the weekly here because we give weekly and daily inflection points very easily here. So I've got 86.81 rounded off and 87.08. So that DMZ right there is, in my opinion, could be a dig-in point for this. And here's the weekly, kind of gone down and gone back, retraced back into this DMZ. But I'm considering this a high probability situation for shorting, even though we broke out before on the weekly. But, this stock is not cooperating with what the market's doing right now. And from a relative strength standpoint and just from a profile standpoint, I like John Deere's a short. I may be wrong, but that's what stops are for, above the 80. Numbers I gave were 87.09. So, again, a couple of the other picks. I want to pull this up, and I'm going to change tone here, and I'm going to go down below the box, and I want to see what's really the dogs of the S&P 500. Looking at my daily, I'm going to just kind of cruise down the line here. PXD, I just want to take a look at that really quick. PXD. All right, so here's the weekly on Pioneer Natural Resources. Obviously not cooperating with the markets moving up here again, but we've got 172.55 sitting here as weekly on for lows, close below, kind of coming back. But that DMZ, as I like to use them, where we have kind of dual inflection points. Here's the daily setup. So, again, a little bit above the weekly on for lows, but you've got kind of a little bit of a no man's land here. But the upper part of that DMZ range right now, 177.30, and it's kind of cool how we've retraced back up in these areas. Again, if we do have any market cooperation pulling back, this may be something as a candidate to look at from the short side. It's really hard to buy, to trade indices, that's one thing, but to try to trade stocks, which sometimes don't have that high beta value all the time, it's a little scary to buy stocks right now. I feel very comfortable trading the index on some of the inflection points that we provide based on that breadth. But again, you try to find anomalies going on. This is a good example of an anomaly, and you've got a high probability setup sitting in front of you on P based right off the scanner. So, guys, you've been great. Stay tuned for Steve Rhodes, Trader's Edge. He'll be right with you. We'll pick it back up again tomorrow. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.